It seems to me that, 20% on the phone. It seems to me that in the last few days, the market is acting as if there's a binary outcome. Either hardcore recession, massive sell-off, jobs loss, etc., 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 or all of that is entirely avoided and the market has to rally. Yesterday we had a rally. People seem to be somewhat optimistic. All of a sudden we got one recessionary or not so hot indicator and the market did quite a dramatic move to the downside. Today we just seem to simply push all those fears to the side and saw a tremendous rally. I'm going to try and look at things not necessarily in a binary outcome, but simply as they are and make my assessments from that. We've talked a whole lot about Apple in the past several videos, and I still think this is important. Apple rallied today. We saw something with Netflix earnings, but the announcement that they had yesterday did not go away in a day. The fact that they're taking staff off the table did not go away in a day. Now, we have to wait for their earnings, but I think the fact that they're cutting staff, the fact that consumers are pulling back on consumer electronic spending specifically, does not bode so well for the company that is the 7% of the S&P 500. You add additionally that iPhone sales, the upgrade cycle, was slowing down prior to COVID. We had this massive COVID bump, not just for the stock, but in terms of their earnings, which gave them a well above historic PE multiple. And you're still well above that historic PE multiple with a possible fall in the E. So for a company that's 7% of the S&P 500, I'm not entirely convinced that they're going to have a situation like Netflix. Let's not forget, we already anticipated Netflix was going to lose subscribers. That was, fully anticipated. So they lost subscribers, they lost less subscribers than expected. I mean, come on. Is that really so awesome? The stock is still down over 60% year to date. Apple's down, but it's still anticipated as a strong stock. It's still appreciated as Apple. We've seen it trade as such. It's up 16% in the last month. This is not, a growth stock. That's a real growth stock that's down some 80 or 90% off the highs, but has continued to improve the product over the last year or so. So I'm not fully convinced that the stock that is 7% of the S&P 500 is ready to bottom and rally. That's just my position. That doesn't mean I'm not in stocks. I mean, I have aggressive hedges, but I'm still up today. The market was down yesterday. I was up yesterday. So I'm balancing things, but I think, the stock that's the 7% of the S&P 500 might take a hit. They haven't mentioned Forex. We know Microsoft mentioned Forex, but Forex is a huge part of Apple's income. They sell phones all over the world. They sell a lot of phones in China. China's been on lockdown. Who knows what's going to happen here? I'm not so optimistic. I think their earnings might come in lower than expected. I think the stock might pull back. And where goes Apple, goes the market. We'll have to see what happens. I just see some crude inventories. I'll take a look at that. A lot of people think peak inflation. Oil has moved $12 in a week. $12 in a week. That's almost 15% from the lows. We might be at peak inflation, but I don't think we're going to be at low inflation anytime soon. I don't think gas prices are going to come down meaningfully. Yes, they've come down, but there's a number of reasons why this isn't the end of oil. The Biden administration is unloading barrels from the SPR and artificially pushing down prices. What they're doing with that money that they're selling the oil at is they're buying future contracts. That means in the future, there's less contracts on the market, and that ends in October. It's not too long, just about 3 months or so from now. I don't know exactly what their hedging strategy is for the future contracts. All I know is they're unloading some million barrels per day. That's roughly 1% of global consumption. It's not a trivial amount. These oil price swings are driven in the hundreds of thousands and, maybe 1 or 2 million barrels per day. So small changes in supply demand lead to massive changes in price. So I'm not convinced oil's is just gonna go straight down. I mean, it's down a lot from its high, and I'm back in. I sold at the top, and guess what? I'm buying back in now. So we're gonna see what happens, but I think it's not all gloom and doom, but it's not all mega rally, buy everything because the bears are totally wrong. Like, there's definitely reasons to be concerned. Home prices are coming down. That's probably just getting started. Consumers have maxed out credit cards, and we're seeing credit card spend decline. Earnings expectations have barely been revised downwards by analysts. Bank of America recently slashed their S&P 500 year-end target from 4,500 to 3,600. That's a tremendous slash. Like, I would definitely be cautious. And while I'm not saying go 100% short, I'm definitely not saying go 100% long. So that's today's video. And until next time, peace out.